We want to keep our eyes peeled right now on Wall Street. We have hit an all-time record once again for the Dow. If we close there, this will be the 30th record of the year. I want to get right away to Bob Dahl of Nuveen. Bob, do we have to order Dow 22,000 hats? Look where we are right now. We're at 21,928.
Pretty impressive, isn't it, Liz? Look, I think the market's marching to three drum beats in order of importance. One, decent revenue and earnings growth. Two, contained inflation. And three, the prospect of some sort of tax cut. The White House circus, if I can call it that, is a sideshow at the moment and not disturbing things. Well,
I just want to point out to our viewers, we're up 96 points right now. High of the session, we had been up there. We're about to break through it, I believe, 99. And so, therefore, as we look at what's happening, do you think there's almost like a Kelly premium here where General Kelly, it is perceived, will calm things down as we continue to watch stocks move higher, ex the technology names today?
You know, it could have a little something to do with it, Liz, but I think the investors are saying, I'm from Missouri on all of this. Show me the good. Show me a contained White House. Show me some consistency in policy, and maybe we'll smile. But in the meantime, it's earnings that are driving the market, as you know.
The earnings have been very strong.
They continue to be good.
And there's also sort of a holdover, a long vapor trail here. Boeing last week had great numbers. Boeing is a real powerhouse once again today. And tell me where you say people should be putting their money, certainly not in the richly valued names at the moment.
Yeah, well, you know, it depends. If the goods are coming through, why not? So we like financials, expect modestly higher economic growth, modestly higher interest rates, and regulation that continues to get rolled back. So lots of good names there. State Street would be an example. Healthcare, you know, out of all the uncertainty, look how well healthcare has done. Biotech, some of the pharma companies, United Healthcare would be a great leader in being the prime example of the guy who can execute in healthcare. And then technology, I think you need to be a little more particular. VMware is a choice of ours, but there are lots of others that we like. We like technology. It's still balance sheet strong. Free cash flow, biggest beneficiary of repatriation when that comes, hopefully next year.
Let's quickly talk about VMware, because the FANGs aren't doing it for us today. That doesn't mean they won't be back up tomorrow. But what is it about VMware that you really like in technology land?
It's just because of the business they have in virtualization, software and solutions for the whole technology infrastructure. They continue to have lots of good customers. Their competition is Microsoft and Citrix, among others, but they continue to power forward. And while the stock's up and not particularly cheap, it's not way extended like some of the FANG stocks you referred to.
Do you get the sense, and I want to just drop in oil here, because, folks, this is very major news we don't want to get lost. That is that oil closed above $51 a barrel today. It has been hard to get there, certainly. Above 51. So as we look right now, it's slightly below 51 at the moment in the aftermarket session. But do you like any of the energy names here, even though there is still excessive oversupply?
You hit the nail on the head. That's my problem, excessive oversupply. Look, the oil's up, I would argue, largely because the dollar is down, Liz. The oversupply exists, and, you know, we talk about disruptive technology. There's no better place to find it than in the oil patch. The ability to get a barrel of oil out of the ground at a lower and lower cost every year because the technology keeps that supply high.
I just want to let our viewers know that we are awaiting Sarah Huckabee Sanders to have the White House press briefing, and there is quite the poo-poo platter, as you can order in a Chinese restaurant, of breaking news to be dealing with. And we don't want to ignore, Bob, that North Korea actually launched a missile that now went about 600 miles further than their most recent one just a few days ago, that could hit either Los Angeles or Chicago. This administration has a lot of drama around it, and a lot of it is sort of infighting in the sandbox. There are some very serious issues. Do you expect that at some point, this market definitely needs a healthy correction, maybe, at some point? What goes up does come down. Yep. But what will spark it? Some negative earnings story, or a missile that actually could reach New York City?
The truth is, no one has successfully called corrections over time, as you know, Liz, but when one happens, we'll all know the cause. We'll point to it after the fact. I don't know what might cause it. Geopolitics, there's a long list of issues, and of course I come back to the earnings are driving markets. If we have a problem there because the economy's slowing or inflation's picking up, that could trigger a correction. We haven't talked about the Fed. The Fed, I think, has been pretty benign, wants to find a way to normalize, but you know, got that balance sheet issue out there. Everybody's got an opinion, but nobody's lived through that wind down before, so we'll see how that plays out.
We have not seen that movie before. Bob, thank you. Bob Dahl, Nuveen Asset Management Chief Equity Strategist.